instant audit on this. We welcome Bob O'Brien from Barron's and Ron DeVary, the founder and CEO of NewOak Capital. And let's start with you, Bob. This business about the weather, we always say the weather, it could influence this way or that way. Does it really matter? I personally don't think the weather really is going to impact, does it?
Yeah, no, I think it will, because we've seen it historically that these severe weather conditions, the week the survey is taken, have actually shown up in the numbers. So this is kind of a can't lose situation, I think, for the economy, because if the number comes in hotter than expected, if we see something closer to 100,000 jobs lost, then people are just going to say, well, it was completely skewed by the weather. We'll wait until we see the March readings in early April, and we'll make our judgments then. If the number comes in, if, as it turns out, as you suggest, that the weather wasn't a factor, and the number comes in closer to the 20,000 we saw for the January reading, then everybody's going to celebrate.
Ron, I'm curious, will the people who are trading on Wall Street, are they really going to pay close attention to this? And as Bob is saying, if it comes in at 100,000, well, then they'll brush it aside as weather and we'll have a good day on the Dow?
I think plus or minus 50,000 here is not going to change a whole lot of things, because this is a measurement system that does have errors in it. And as highlighted, there are a lot of other factors that come into the picture. I think ultimately people look at the consumer sentiment. Consumer sentiment is also something driven by employment, and I think people are, these numbers that, as you saw, there's the general sense that we're really not out of the woods here, and therefore the quantitative easing is being even talked about, even in Europe. And that's one of the reasons the markets are feeling very good, actually, because that means the higher interest rates are not about to come as it was expected by the second half of this year.
Might we get a surprise, as we did with some of the retail sales figures yesterday? Ron, I mean, a lot of stores were actually, I'm still shocked with TJ Maxx. I mean, their sales year over year were up 10%.
Well, I mean, because we come off of
we come off of a horrible year, but doesn't it indicate to a degree that people are spending?
Well, they're spending for now, but the question is, can they actually
sustain it?
Sustain it, and that's really the big part. Are they actually still dipping into their savings to do this? And the reality is that consumer sentiments on a historical basis, we're still coming off the lows, and that's really where we should really be focused, ultimately, to look for the real sign. And we know that's, you first got to get the employment, and then you get back to the historical averages in consumer sentiment, and then you get the real sales going up, and then you get the, it's really, it's all a psychology that has to...
well, psychologically, let's look at this, because Ron brought up an interesting point about the traders. Might they just dismiss whatever the number is today, given the fact that we have the Federal Reserve indicating that extended period, the language they love to see, is going to be for a long time? We've seen it yesterday with the ECB. Mr. Trichet, they held their interest rate. We're not going to get an interest rate hike anytime soon, and there really is no threat of inflation on the immediate horizon. So the guys down on Wall Street have to be loving this.
Yeah, they do. The one thing that could change that dynamic, and I completely agree that the interest rate environment has been pretty good, but if you look at the way the market has reacted to somewhat accommodative and constructive economic data recently, we've been pretty flatline over the last 6 weeks or so. So we haven't responded affirmatively to good readings. The one thing that is on the horizon is the end of that Fed mortgage buying period, and that comes at the end of this month. So what you want to watch for is to see whether or not the spread on those mortgage on those mortgage rates starts to widen in anticipation of that.
We're going to drop it there, but we're going to be talking more about the jobs numbers. And two things, I'll give you a hint about what I want to talk to the two of you about. Nouriel Roubini, Dr. Doom, once again predicting a double dip. Yeah, we'll probably have a double dip recession. And then I think it's the Financial Times has an article talking about the housing crisis is actually more severe in the United States than we appreciate right now. And that could bode very poorly for where we're headed. But we'll talk about that the next time we hit the jobs report stuff. Right now we have for an instant audit on the latest Toyota news, we go back to Bob O'Brien from Barron's and Ron DeVary, the founder of NewOak Capital. Ron, what more can we say about Toyota? I mean, can it get any worse?
No, it cannot. I mean, these are really bad times for them in terms of trying to get a hold of their quality control and get things done. They obviously had to do this in a hurry because of the public concerns about the whole thing, and then they got it wrong again.
And is this, Bob, is this a repeat of Ford 1970s Pinto?
Well, it's not, because it doesn't seem quite as chronic a problem as the Ford Pinto, but what it shows up is the difference between the experiences we've had in the U.S., where we had things like the Pinto, the Tylenol scare several decades ago, and all these sort of crisis management initiatives have sort of tested the mettle of U.S. companies. Whereas in the very insular Japanese culture, they don't have that crisis management mentality. So I think their response to this whole initiative has been extremely poor, especially by our standards. Very slow to bring management out to explain exactly what was going on, and very slow to bring management to America. And I don't know that they've still learned their lesson on exactly how to deal with this.
And the real issue here, if I understand the 3 hearings that we have now lived through from Washington, is, did Toyota know? Because we know there was an issue going way back to 2002 that they started looking at. They had recalls in Canada and Europe, but not the United States, so there was a communication problem. But what did Toyota know? When did they know it? And how did they react? That is, at the end of the day, the issue, correct?
Absolutely, and it's really a management style issue as well, in terms of whether employees are able to convey the facts, up the ladder, so that the real initiatives are taken. And that's really at the heart of all this as well. That this may be actually news to the management at this point, because they may not have actually been fully aware of all these issues.
Well, but then you get that memo from Mr. Inaba.
Right.
We saved 100. It'll only cost us. I think we saved $100 million because we were able to restrict the recall. That is as close to a smoking gun as management did know as that we've come, isn't it?
Right, exactly. I mean, at this point, they shouldn't be really worried about costs here. To make sure, they got to really damage control, and they got to go back and saying that we're really on top of this, and we're going to get it right. And sometimes you may have to say that it's going to take a little bit longer to get the problem fixed, but we're going to get it fixed once for all.
Is Toyota past the point of no return as far as the sales losses they've experienced?
No, I don't think so. The one thing we've seen over the last several weeks is that these problems keep manifesting themselves in new ways. It seemed like for about a 2-week period there, every time you opened a newspaper or turned on the television in the morning, you heard of a new crisis with another Toyota product, whether it was a braking systems on certain vehicles or the accelerator on others. And it seems as though there are pervasive mechanical problems here. I mean, it looks like, look, these things are essentially, computers with wheels.
Right. And
it seems as though the operating system has some bugs in it.
There was the GM recall earlier this week on the power, the motor, the power assist motor for the power steering. The unit is actually made by a company in Japan, which is 50% owned by Toyota.
Toyota.
We reported that. I don't know if Toyota was so happy about it. But gentlemen, thank you. Thanks.